actually talk about credit card spends. How has that trend actually been shaping up this time around as well? And what has actually happened in the month of November? That credit card spends actually have seen a bit of a decline coming in. SBI Card seems like an outlier in terms of the spends, which were up by 50% in the month of November. Now, to talk more about this, we're joined by Shweta Daptardar, from the Vice President from Elara Securities India, joining in with us. Shweta, very good afternoon, and thank you so much for joining in with us this afternoon on ET Now. What I want to start by, is talking about the cards in force also. When you look at that, that has risen for the industry on a month-on-month basis by 1.4%. But when you're looking at it in terms of the spends, that have actually seen a decline after the festive season. So, is that something of a trend that you see every year, or there's some different trend that we're shaping up this time, or something that you're seeing different this time in these spends?
Yeah, hi, good afternoon. So you're right, credit card spends have declined, and this is atypical to a post-festive month quarter that we see month-on-month decline in spends after a heavy festive spends related months. So if you look across industry, for company specific, be it SBI Cards, HDFC, and other top players, while month-on-month there has been decline in spends post the festive month, the year-on-year growth has been phenomenally strong across key players. As far as number of cards outstanding is concerned, so most of the players have maintained their market share. And if you look at the industry per se, month on month, these spends, while the spends have degrown, the cards outstanding have actually grown and remain stable.
Hi Shweta, Somit also joining into the conversation. So we do understand that in the month of November it has declined because of the seasonality impact. But if we club both the months, that is October and November, and compare it with last year, how have the spends increased, and what is the kind of trend that you're seeing when we combine both the months together?
So yes, you're right. Somewhere the spends decline has been slightly sharper this time around for this particular year vis-a-vis last year. And there are a couple of reasons for that. So look, so last year, if you compare, that was coming on a very high base year. So one of the reasons why the post-COVID months remain stronger, led by especially replacement demand. If you compare this particular year, the spends have been showing a little bit decline vis-a-vis previous year. So the reasons where you can attribute this is also there have been slight decline in consumer discretionary demand. Point number one. Point number two, the corporate spends for the entire industry have gone higher. So while corporate spends are chunkier, but they are very low on the net interest margins front. And third, if you look company specific, so barring the key players, actually the spends have improved vis-a-vis last year for most of the other players. So there's been more to read. The numbers have been dynamic per se, but net, the festive season has continued to remain stronger. Seasonality, definitely, as you rightly pointed out, has played out.
And do you expect this trend to turn around going forward? What is your channel checks on your conversations with the company suggesting?
So yeah, typically, like I said, November tends to be seasonally a weak month. But if you look at overall Q3 per se, the quarter is looking healthy. We have still December spends which are looking stronger per se. That's purely because the holiday season is on. So credit card spends continue to look stronger. Also, we have to understand that for pure play credit card players like SBI cards, you have even UPI spends that is catching up well, where SBI card has 9% UPI penetration. There are new categories which are getting added in terms of health, utilities, consumer durable spends at POS have remained stronger. So most of the channel checks have been signaling positive signals. So Q3 spends continue to remain healthy.
Shweta, if you could also talk to us about this, in terms of the impact of RBI's intent on clamping down the unsecured credit. How do you see that in terms of moving forward as well? In terms of how do you see it impacting, the spends?
So yeah, the RBI, which has come little hard on unsecured retail credit, and perhaps the consumer credit card customers should also show some unusual behavior. So yes, you're right. So next 2 quarters remain slightly under radar, especially from the credit cost front. So for SBI cards, if you look at Q2 FY24, the gross credit cost have remained around 6.7%. So I believe this kind of number will remain at similar levels for Q3 and Q4 as well. So I clearly the kind of signals which we are getting is Q3 is slightly weaker in terms of credit cost, wherein you will see these credit cost inching up. And Q4 again, you will see credit cost slightly higher, north of 6% only. So yeah, Q3, Q4 looks slightly pressurized as far as the new RBI norms coming in, and plus a slight unusual behavior on the consumer credit card segment.
Also, Shweta, just for SBI Cards specifically, the market share has remained quite steady right now as well in the month of November. So what's your take on this counter specifically? Given the recent headwinds, where do you see SBI Cards in terms of that?
So yeah, you are right. SBI Cards has come a long way as far as the headwinds are concerned. Last year it was waiving off over limit charges. This year we saw consumer discretionary spend slightly declining, and then we saw the RBI norms coming in. But if you look, as you rightly pointed out, the market share, be it cards outstanding. So today we are talking about 18 million outstanding credit cards for SBI, and they are adding almost 1.1 million per quarter. And the growth has been, so if you look at year-on-year annual basis, the growth has been at the run rate of 17-18%. So we clearly believe this outstanding credit card growth of 17-18% should hold up well. As far as spends market share are concerned, so again, that has remained steady month-on-month basis, quarter-on-quarter basis. Again, the spends, average per spends have been growing at 20-21% range. So even going forward for the full year, we are seeing 21 to 22% annual growth on spends for SBI cards. So as far as the business volumes are concerned, SBI card has been rightly positioned to sort of maintain the market share. Also, like I mentioned earlier, the UPI-based penetration, the retail spends on the POS side catching up, the new retail categories adding up, all that will lead to strong business volume numbers even for FY24.
Okay, Shweta, thank you so much for joining in with us, talking about the credit card spending trends. What should we be expecting going forward in terms of a trend as well? Thank you so much, Shweta, for joining in with us.
Thank you.
That was all about the credit card spend, especially in the month of November.